Done. Okay, we're ready. We're back. Okay, welcome to episode 2 of the Squirrels of Spark Street. I think that continues to be the name.
Yep. We're good on that.
We had.
I gotta get my back. I gotta get my back.
There's your background. Okay, well, I have a background for today because I'm feeling very good about today. I'm just having just a very exciting day. So
I'm celebrating your trip.
Yeah. So episode 2, we're calling it Back from the Dead. And I will get into that real quick. But I did once. So we did episode 1. It's kind of goofy. We kind of introduced ourselves. Today we're going to spend. It's going to be a little shorter today. We're going to spend a little more time about our positions and what we've seen over the last week and a half. There was a delay in the second episode because I caught coronavirus. The virus that I didn't think would do anything, turns out it just about knocked me on my ass.
Did you catch it on, was it It's a Small World, or like where was it? Space Mountain?
Space Mountain. No, well, somebody said to me, did you catch it in Tampa at all the strip bars? Because Tampa Bay is famous for it. And it was like, well, I didn't kiss every girl I met.
But as you can tell, like, see, Mickey's protecting himself. So, yeah. So I mean, I was thinking you probably didn't get it from there. He's wearing the gloves. He's got the social bubble going on.
Yeah. So I'll quickly describe what happened to me. Lost my sense of taste and smell.
Still lost it. You don't have it back.
We lost it. Like it's been gone for about 8 days. Like Fabulosa, the cleaner. I mean, the floor cleaner it's got a special smell to it. It's got this like grape smell to it. I mean, you can smell it a mile away, and you can open up the bottle. Cleaner. Yeah, you can open up the bottle underneath my nose, and I'll be like, I would drink it like it's water. Like I have no idea what it is.
That.
Anyway, so the other thing too is like, we did actually get a fair number of hits on our first episode. I think. I mean, I was sort of expecting 2. One of me hitting it and the other of Scott hitting it, but it turns out we had something like 70 something hits on it.
Oh, that's cool.
So 70 people out there spent a few seconds with
these idiots are doing.
These 2 idiots with their banter. But moving on to the market.
Let's get into it because we said we were going to do 15 minutes or something.
Yeah. So the clock's ticking. We're like 4 minutes in. I looked at the clock. We're 4 minutes in. So Scott, tell me what's going on with your positions.
So what a great week. My position. I think I'm going to talk a little bit about AGQ.
Okay. Yeah, that's a good one.
By
the way, a day 24 hours ago, I'd been like, screw you. I don't want to hear you talking about AGQ.
Yeah. Okay. So here's a little bit of background. I've been heavy in commodities, specifically silver, for a little over a year now. And I think what kind of got me into this was, well, first of all, my father highlighted the fact that you should take a look at silver because his view was that commodities, things of value, are things that are scarce. So if you want to look at things like gold, gold has value because it's scarce, and silver has value because the scarcity is in ratio to gold. And so if you look over history, I actually have something to present. Okay, hold on. So I wanted to show you this. So this is today. I'm just kind of watching AGQ. We'll get back to that. But so if we go and we take a look at historical silver prices, now this is kind of what I wanted to show you. Over like thousands and thousands of years, gold has existed. You can see this, right, on my screen?
Yep, I can see it.
So so until about the early 70s, it was pretty much following the same path, and then gold kind of took off. And then it was this crazy period where gold became way, way, way more valuable than silver. And historically, silver has been about 20 times easier to find, which means that it's around 20 times less the value of gold. Now, where we are these days is actually, if you take a look at, I think it's around 18 something today, almost in the 1800 range. And then silver is kind of in the 15 to 16 range. It has been around 120 times the ratio, which is crazy because that ratio is wrong. And that kind of changed around here, around the 2011, 2012 period, and it just kind of broke apart. And my dad does a lot of reading. This guy, specifically Ted Butler, he does a report that has been talked about where there's been manipulation by JP Morgan, this company JP Morgan. And it what he highlighted was that JP Morgan has been manipulating the silver stock around 2011. Mm-hmm. And that's where you actually see the push of silver down. So JP Morgan owns, at the time, they own about a billion ounces of silver. And because they own so much physical silver, it allows them to manipulate and keep shorts on the silver price. So what we've been seeing over the last 10 years.
Why do they want to do that?
So what they want to do is just like you want to have value. They also own gold too. What I would say is that allowing them to keep the price down allows them to kind of watch and manipulate the price. So when they need the price to hop up, they can push it up. When they need to push it down, which is what they've been doing, is driving the price down and actually driving the ratios down. Mm-hmm. So if you actually own more, then you have the ability to short more. Mm-hmm. So what we've seen lately is, so this guy, Ted Butler, he wrote a lot about the fact that the Justice Department isn't going at JP Morgan, and they're actively like turning their back on JP Morgan and letting them do this manipulation. Well, I think it was about a week or so ago where on the COMDEX, which is the commodity index for trading gold, silver, platinum, alt, copper, 250 million ounces of silver were traded. And his theory, this guy Ted Butler's theory, was that it was a deal made between the Justice Department and JP Morgan to actually basically pay off their debts, or pay off their ills, their problems. And so what his theory is that they were paying out to the ETFs, because ETFs actually have to hold physical silver in order for them to maintain value. So 250 million shares went off the COMDEX to these ETFs. And one of the ones that I watch is AGQ. But there's other ones too, like SIL or SLV. All of these ETFs are they actually are miners. So you're not holding physical gold or silver. You're holding a share in a miner, which is of value because they're pulling those commodities out of the ground. So anyway, what we saw last week was kind of interesting, because it's kind of what I've been thinking over a long period of time. If you actually look back here around 2011, this is where I see some really interesting things happen. So this is where the value of silver is around 30 bucks, and gold is around 1,500. Well, imagine gold going up to 1,800 what should so I'll ask you, like, what do you think that if gold was 1800 and it's maintaining the level and the ratio during that period, what would you think it should be?
Well, you're testing my simple math skills here without a calculator.
Just just ballpark it.
I don't know what it would.
So I think it would be somewhere around $50.
Okay.
Okay, so let's go historically. So AGQ is an ETF that basically acts as a multiplier off of silver. So when silver goes up $1, AGQ typically goes up $2. But also vice versa. As you know, when I've been talking to you about this in the past, AGQ has gone down $1. Has gone down a couple of bucks when silver gets beat down. Now, if we actually go and take a look at AGQ, and okay, so this is where we were today, and it's not doing very well today. I'll kind of say what happened this week though. This week was a pretty good week. If you kind of say here's where the manipulation stopped, was around last week. It's really taken off from there. So let's say we go back 5 years. Really, 5 years is not a huge horizon. It kind of looks like we're about where we were in 2016. But if you go back to that June 2011 point where I was talking about earlier, let's go back to max. This is where I see, so here's 2011, we're sitting at, and I'm not talking about it going into crazy numbers here at all, but even if it gets in and around this August 1st period, when that was when silver was around $35, the value of AGQ was in the 300 range.
Mm-hmm.
So what I'm sort of expecting to happen is it at least to go in the hundreds. Let's just say it goes in the hundreds. That is not even thinking about what the emotional effect of this crazy market is. Imagine people that are in stocks right now need to go somewhere when the market starts getting a little hokey, which I would take a stab and say that's kind of where we're getting at now. I would say that this is about ready to take off. And that's why yesterday I was kind of saying to you, $40 is still not a bad point to get in. And that's kind of where we are today.
Yeah, no, I agree. And as you know, but tell me what happened today. So the market obviously is down today.
Yeah.
But what sparks, usually when the market's down, to me, investors get afraid of the market and in equities, and they decide, oh, I'm going to get into gold or silver. Like that's typically a haven, right?
Yeah.
What happened today?
So I don't really know. What I would say is that there's still a lot of manipulation that can happen at the bottom end, because there's still a lot of people that own shorts, I think, in the market. And so you can still short silver and you can still push the value of silver down. To me, if I actually look at where the values are, we're still getting large numbers. Like the volume, today is 3 million. So 3 million shares of AGQ are being traded. That's crazy. That's a lot of trades that are happening compared to what the average used to be. But yeah. I think personally, that this is kind of a bit of a settling of what happened in this week. I think that if you're actually trying to expect that the stock is going to continue to do well, what did it get over the last, I mean, let's say a 20% increase or something over this past week. It was like 16% yesterday. Like that was a bump of 16% in one day. It just, people are going to start seeing that these are going to be reported, and it's going to be like, oh, the big winners of today are whatever. Yeah. If it's AGQ,
which we got people this morning, right?
Yeah, exactly. Like it was on Bloomberg, right?
That's right.
So I would expect that it can't jump to this level, but if you were to average out where you think that the market should go with AGQ, I would expect until it starts to become a little bit more normal around the 1800 to 50 range. So the
Yep.
$50 of silver, that's when I would expect to get out. So
Right.
if you're wondering
Right
what
now,
I
today,
get out, I think we would get out around 50.
so it's an exceptional buy today. So if you had the opportunity, would you buy it today?
Yeah,
Yeah.
but I can't. And this is a setup. You totally set me up because Ulf knows that I have this short, or sorry, a short, should have shorted it, but I have this fun, I have this position in Slack, and I didn't want to talk about it right now, but
By the way, let me just add something to this. So Scott has a position in Slack. He talks to me about it probably 3 or 4 times a day. And I'm it's just built up as this really big thing. So in my mind, I'm thinking to myself, because I know the size of Scott's portfolio, and I'm thinking, man, like he's really underwater, like by a lot. Like this dog that he keeps referring to in Slack, he's really in trouble. Like he's lost a lot of money. Newsflash, a lot of money to Scott is like $500.
no, it's not $500.
Well,
So right now it's 1,000. I think it's $1,000 under today.
oh my
But
God, you
before,
lost $1,000
even before, yeah,
Canadian.
even
Canadian.
probably Canadian. But here's the side where you gotta like really understand the psychology
You've
of this.
wasted. I know, but you've wasted so much time lamenting over this stock and when is it going to go up and watching it and everything, when you could have been making. And it's a bit of a bad example right now because this particular one that I'm going to talk about has gone down a little bit today. But let me talk to you guys about NAIL, NAIL. It is a
Nail in the
what's really
coffin.
cool about it is, yeah,
It's a nail in the coffin.
the nail in the coffin. I want you guys to go look at it. It's a direction ETF trust. It is something that I essentially, last time we talked about DRV, I bought NAIL as sort of my yin and yang to DRV. So my view is, as we think about commercial properties, people not going back to offices, people not, using that space, businesses going out of business, declaring bankruptcy, restaurants, etc. DRV is sort of shorting that market, and so DRV has been a really strong runner for us, and I continue to hold that. What I did was I bought NAIL. I bought NAIL in July for $23. It's sitting at 36.73 today. That's a 53, a little over 53% gain. This morning it was actually up around almost close to $40.
So what does it fundamentally do?
So fundamentally, NAIL is really, like I said, an ETF that is investing in like various home construction indexes. So, for example, construction supplies. So, as we think about folks leaving the cities, leaving apartment buildings, and moving out into the country, or moving out into like track homes type of things. That's really what this particular fund, and it's a 300% return on the select home construction index on the Dow. So
I think the only thing that I agree with you. I think it's a good play. I think that the only thing we've kind of talked about is the wild card factor of people not really wanting to own their own home, but wanting to have a home and be able to have a big property. I think that's the interesting part.
Well, my thoughts on this one are a couple things. So first of all, we're sort of still in this spot where the people I'm talking about are buying this are people who have the money to be able to, who still have jobs, who if we continue to see the trend, because we saw really, really high home sales in June, the numbers that came out yesterday were very positive. There's been lots of transactions there. Problem is the fundamentals of the economy, although bolstered by, the added unemployment dollars in the U.S., which is like extra $600 a week, and all the PPP loans and how people have been spending those loans for their businesses, are sort of questionable, maybe. So it's been driving this demand, and so maybe we've seen sort of an inflation there and an overall high demand that's really not sustainable. So it would be something I'm kind of like keeping my eye on. Like today, the market was really, it's pretty rough, and so NAIL going down sort of is an indication of the market. I would say if the market continues to see a decline, which I'm not sure if today is the indication of what's to come. It's been such a hard thing to predict. But everybody's talking about it this morning is the fundamentals are just not matching. So in other words, the market is not the economy. The stock market is something different. And so if we do see the downward trend in the market, I think we're going to see NAIL not perform as well. That said, it's been a great run. 50% is 50%.
So how do you counter what's your theory on countering the drop in the
market? Well, my plays. So BZQ, DRV, SDOW, HIBS, SQQQ. SQQQ was a runner today.
What did it make?
It's over, it's close to 6%.
Yeah.
And so to me, those are like BZQ is pretty volatile. You can see like it's sort of an indication of the sentiment of the economy, and the market. So when people think it's fine, then you're obviously not going to perform very well. So it's today.
It's like a multiplier the other. It's like an AGQ the other way, right?
It's like an AGQ the other way.
When the markets have been taking off the last couple of weeks, BZQ. I'm getting hate mail from people that I recommended BZQ.
Oh yeah. Well, you recommended BZQ to me, and I've been in and out of it a little bit, like sort of like it's a bit of a day trader.
It's totally volatile. If you want to play it, that's a really good one to play.
But it's a tough one to play because I was like negative on it for a while, so I had to sit on it.
Yeah.
But now today, I reversed half of the negativity that I had on it in one day. So
you're still underwater?
A little bit underwater, yeah.
Not too much. Like 1,000?
Yeah, 1,000. I consider that sort of nothing, really.
So I didn't get a chance to defend myself.
Right. So anyway, like I said, today has been a really good day for me because it's weird. Like I've had positives on either way as the swings, because this morning, very, very strong with NAIL, with some of the other funds that I have. And I wasn't doing that great on my shorts, and then like my shorts on the indexes, and then this afternoon the shorts on the indexes have been incredibly strong.
Yeah.
As we see, like the S&P is down 1.2%,
Nasdaq down 2%.
Yeah, and then Dow is down 1.3. So
So are you going to call it? Is this the drop?
Is this the inflection point? I don't know. Like it's just so hard to say. Like I've thought it.
This was the week of earnings.
This was the week of earnings. The other thing too is the unemployment numbers came in, and then of course the death rate and COVID numbers all came in, and none of this news is good. Like none of the news. Like even Tesla's news, which was good, resulted in negatives for them today.
Are they down? I thought they were up initially.
They were up
initially. Up to like 1,700 or something like that initially.
They're down now.
Oh, right.
So to me, it's like, when is it that we're going to see? I'm going to just say what I think. I think we're going to see a continuation of decline over the next couple of days, and then that's all I'll call. And then we'll see where we're at for next week when we do our next quick update for all of you.
I think it's going to come back. I think after the $2 trillion injection, I think that the markets will come back strong. Where I see it, I'm going to call a softening is in early October when we're starting to see early signs of the election. I think
I,
that
I
I
don't
think
think the
that's where it's
next
gonna be.
stimulus is going to do what this last stimulus did. So
Really?
you and I are different on it. I just don't see it. Like I don't. I mean, my gut has to go with the fundamentals, and the fundamentals are disappearing.
Well,
They're just
and that's why I think that people would go back into commodities. Like when I mean, go back to the scarcity conversation again. When money is not scarce, like say for example, you're printing money all the time. It's not scarce. It doesn't have value anymore.
but Scott,
That's where it's going to move people over.
today money is not scarce. I don't think more stimulus in it is gonna create even there. There is no.
I know. That's what I'm agreeing with you.
The companies are able to raise capital like with the snap of their finger. The IPOs are exploding. I'm just saying, how
Because
much more?
there's value, there's money out there to be had. There's money.
I
There's
think so.
currency.
The only thing that the stimulus will do is drive up some consumer spending, but the problem is that's super short-lived because the reality of the increase in unemployment and et cetera is going to turn the sentiment.
Yep.
So you and I are different on this one. Let's see how it goes next week. Whoever's right or wrong, we'll know next week.
Trip to Disney.
All right.
All right.
I think we're done for today.
Very good. Good to have you back.
You too. Talk to you later.
See you later.
Bye.
Bye.